Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Thursday, gang. Hope everyone's doing well, getting ready for non-farm payroll. Taking a quick look at what we had this morning for initial claims. Let's take a look at that before we jump into the questions. And what we want to do is look at a 5-minute time frame. And we want to look at initial claims from this very specific perspective. If that number shows there are more jobless claims, that's quote unquote bad, right? Versus fewer jobless claims, which would be good. And good and bad is so tricky to define in this market. Weaker, stronger, encouraging the Federal Reserve to be more hawkish, discouraging the Federal Reserve to be more hawkish. That's really sort of the way that we need to process this. However, I did not even look at the number. And here's why you don't really have to either initially. Remember that we are not playing, us as traders are not playing the number itself. We're playing the reaction to the number. And by the way, it's always the reaction to data or speeches or whatever, that hot zone that we're playing. Now, this moving higher at 8:30, I don't need to look at the number. You don't need to look at the number. But if we finally do, jump on over to let's see here. I'm looking for my calendar. There it is. All right. Take a look. I'm going to scroll down to Thursday. I don't think I've even updated. There we go. Let's update it right now. We expected 205. Previous was 193. We got 219. Greater than expected. That's quote unquote bearish, or is it? In an environment where the Federal Reserve has been as hawkish as they've been, this tightening cycle that we are in, that number tells the Federal Reserve, and tells us that, your actions might be detrimental to the jobs picture. Equities go up. Why? Because the thing that everyone is waiting for, and this is the way that it works for every tightening cycle, gang, is when, and it always happens suddenly and not necessarily even formally. It's not going to happen necessarily accompanying a decision on rates or the press conference that accompanies that. It can sometimes be in a soundbite. It could be on an informal interview. That's how they pivoted in 2019, in a Bloomberg sort of informal thing with the Bernanke, with Yellen, and with Powell. And he pivoted. That was back in Q1 2019. So we're all waiting on the Fed pivot. The quote unquote worse the data is, the closer we inch to that. And that is the mood that we're going to inherit this morning. Yesterday, we had a very nice rally off the lows. My sector secrets folks, my futures folks, you remember what preceded that. And we'll look for that again today when I'm with you in the rooms. What preceded that sort of mild downtrend that we inherited after 9:30, right? There's a downtrend that we get from the pre-market. That's going to be the gap. There's the trend that we get after the bell, but it was down. What preceded it leveling off and then taking off? Well, we talked about this before we wrapped up the morning session. Volume. Volume preceded that. Volume is almost always going to precede a shift in sentiment and ultimately momentum, then trend. So we'll look for something like that to the up or downside, right, as we go forward. All right. So with that being said, let's go ahead and jump into our questions. As always, gang, thanks for being here to caffeinate and dominate this morning. All right, big sip of coffee. Okay. All right, first up, PP family. Is it advisable to DCA call? So what's DCA call options? To DCA as the symbol? I'm not sure what DCA is. Call option. Say I look at, I'm terrible when it comes to acronyms. I can give things nicknames, but I'm awful with acronyms. Say I took a long, okay, here we go. Long 150 call on Apple expiring Jan. Okay, when Apple stock price came down from 150 to 145. Oh, let's see. I see what you're saying. All right, let's go take a look at Apple. So your plan is when it came down to 150 to 145, which was on the heels by the way, gang, of that news that Apple was not going to increase production of the iPhone 14. Apparently, mine's going to be here in about 3 weeks, which I'm looking forward to. Um, I don't, yeah, yeah. So here's the thing, I don't have a long position here, PP. I don't have a long position. It's a downtrend for now. And what I really need to have any type of setup, so I really can't comment on that, is I need a neutral trend. Before that, I'm going to need some kind of confirmation that we've hit the a volume derived support level. Now, there's a pretty good argument we did that specifically on the 30th of September. If that 30th of September volume derived support level holds, then we can start looking fairly bullishly. All right. But as far as I can help you a little bit better with the second question. It's really hard for me to step into a setup when I don't know your risk tolerance. So in fairness, PP, my incomplete, admittedly, answer is going to come from I don't know your risk tolerance, account size, time horizon. That's what's difficult. But the second question, let's dive into that. If I'm going to get into days to expiration, I'm usually going to be 45 to 60 days. Yeah, 45 to 60 days. So is it a good idea to split a call vertical and book profit on the, yeah, PP, I appreciate the questions. I cannot step into speculating on that unless I know the underlying market structure, the time horizon, the trend. So maybe hit me up in the room and I'll be happy to start breaking that down with a little bit more information. All right, Bernie. All right, Bernie asked, oh gosh, you guys are killing me with the acronyms today. No RTHPA. Got to go to my job. Okay. JOB, I know. JOB, I know. Thanks in advance for the daily market info. Bernie, thank you for your time. Thank you for your time. Gang, I can sit here and talk to my cat and dog in the wall all I want, but I appreciate you all making time out in the day, maybe making a cup of coffee and joining the group here. I always do appreciate that. Gang, time is, I know it's so hackneyed, but time is the most precious commodity, and I do appreciate you all giving us here at Simpler that time and trust to allow us to mentor, coach, teach you how to trade and become the trader. Hopefully, I hope every single trader that I teach is even better than I am, because then that propels me to be even greater. And it always reminds me of a funny, it was a bodybuilder. I don't know how many of you are into bodybuilding. I had a couple of friends that were in the fitness Olympias and stuff. And they told me a story of one of the bodybuilders was in this terrible car wreck. And the reigning champion, Dorian Yates, called this, his name was Flex Wheeler, called him up and said, Flex, get back, get healthy. I'm rooting for you. This was his arch enemy, if you will, his chief rival, because he knew in order to get better, he had to get better. And it just kept leveling up. And if we do that for each other, we get inspired by, your fellow traders following the rules, managing risk, and having great trades. It elevates the whole group. And I always remember that story a friend of mine told me where he called his rival up and said, get back to the gym, get better. I'm rooting for you because the only way I get better is if you're out there pushing me. So I love that. I think about that a lot. Hey there, I am Groot. Yesterday, was it a valid day trade to fade the ES? Okay, so now we need to go back to the time machine. All right, hang on. Always very difficult to go back and say yes and no, but let's see what we can do. Was it valid to day trade on 10:30? I'm guessing Eastern, below the line in the sand. We did not have a short. So, Groot, the easiest answer I can give you is we did not have a short yesterday in the indices. In fact, the only thing that we did yesterday, we actually didn't trade the indices at all. The only thing we did yesterday regarding the indices in the room was as we were wrapping up around 11 a.m., we were bottoming out on volume. And even though we had the downtrend, I warned everybody, please don't short in the hole, as it said. What does that mean? Please don't short into lower lows. Please don't short a downtrend into brand new lows. It's a very vulnerable place to be. And in fact, what we were doing around the same time is that we were bottoming out on volume. Volume peaking, bottoming out, when you understand how to measure that, is going to almost always I would say always, but I can't account for that. 99% of the time going to precede a shift in sentiment, momentum, and trend. And that makes sense, right? Because size is going to dictate oftentimes what is to follow by way of the price action. And price without volume is really incomplete. And that's something that I know a lot of you know that I believe and I teach. Hey there, Prince. Can I explain the significance of a minor high, minor low candle pattern? It's a pattern that lets me know if there's going to be a potential, uh, well, I don't want to say reversal, but if I get a minor low at support, if I get a minor high at resistance, I'm going to presume that level is going to hold. So does it work on all time frames? Yes. In fact, gang, unless it's a specifically intraday tool, I was just talking to Lauren about this morning. This is something I learned from the book Trading as a Business, which, by the way, those of you that might have bought super charts back in the day and TradeStation software long before they were a brokerage, just would have been the late 80s, early 90s, right? For those of you who got your hands on that back in the day, I found my copy of super charts a few months back and I posted it on Insta because it was such a walk down memory lane. I felt like the Smithsonian was going to come knocking on my door and say, hey, we want that. So I did keep it. Anyway, the idea that something should work on one particular symbol or one particular time frame is erroneous. It's not something that we should ever pursue because it's not um, robust and universal. Universal means it works on everything. Robust means it works well a high percentage of the time. So minor highs and lows are both robust and universal. And unless it's a specifically, say, intraday tool relying on intraday measurements, like my HPMR, you can actually apply HPMR to a lot of things, but it works best intraday. But remember, everything should work on everything. Otherwise, it's not measuring psychology. It's likely curve fit to the environment or the symbol, right? So I remember going to these huge seminars back in the day, and there was a guy, very popular, good, nice suit, well-cut suit, good-looking guy, and he would sit in the front of the room, and I'm talking 500 people back in the 90s, back in the mid to late 90s when everybody was day trading, everybody was into the market, and he would sit at the top of this front of the room and essentially say, I'm using a 7 RSI for Cisco, but I'm using a 14 RSI for Rambus. And I'm thinking, oh, and somebody might remember Rambus, right? Riding the bus, day trading back in the late 90s. And what was so interesting is I'm thinking, these folks don't know any better. He's just curve fitting. He's looking back at a set amount of data and he's changing the settings. And if you come back in a month and see his seminar again, he'll change the settings again. I'm thinking these folks don't know any better because they weren't taught. Settings should not be changed. What that is inexperience, either from the indicator builder or just them wanting to make it look like it's far more effective than it is. With this guy, I'm sure it was the latter, but it blew my mind how many people thought it was brilliant. And all he did was teach people how to curve fit for 2 hours. Remember, gang, universal and robust. And I would add a third element to that. The settings should be stable. Otherwise, what's happening is we're looking at a set amount of data and saying, oh gosh, I love a 21.3 slow stochastic, right? But what if I suddenly change it to 23? Why did I change it? Because when I looked back at the data, I said, oh, but that setting worked best if I go back 6 months or a year or what have you. But it doesn't mean it's going to work going forward. So be careful of curve fitting. It's very insidious. So Fallen Prince, all time frames, yes, absolutely. All right. I know, big answer, but it's a really important topic, gang, because these are things that I was taught early in my career. And I see a lot of traders aren't taught that now. And well, that's why you're here, right? Not to make the mistakes I did early on in my career. All right. Bought Verb at 50 cents. Verb at 50 cents. Well, did I waste my money? Sue, I'm going to say this as respectfully as possible. I have no idea if it was, but can you control risk? That's the most important thing. So your worst situation is it goes to zero. I don't know. What's your stop loss on that? It is at least neutral. So I think from a structural standpoint, at least it's valid. All right. Ron asks, what is the best sequence of technical indicators to help you recognize the ultimate resistance level on the SPY? What is a sequence of technical indicators to help me? Wow, Ron. The ultimate resistance. Look, first of all, I'm not going to start with the SPY. I'm going to start with the S&P 500. And the second question is what time frame? I'm presuming you're looking at the daily, although I don't know. However, let's go with the daily, right? Because at least then that's the most broad psychological reflection of the masses, right? The masses aren't looking at a 1 hour chart. The masses are not looking at a 5 minute chart or even a weekly for that matter. They're looking at dailies. How did the stock or ETF or whatever close at the end of the session? So what's the best sequence? Well, first of all, it's going to start with what's the underlying market structure. And then the structure is going to dictate what I will look at for resistance. In this case, this is still a downtrend, and the 21 propulsion is going to be in play. Now, when you say ultimate, I don't know what that means, Ron. I don't know that there's any the resistance. What is the end all be all resistance, I guess, is the question. I don't know. I do know resistance is much more like rungs on a ladder than it is just a ceiling, right? Oh, they're all little micro ceilings. They're more like rungs on a ladder, though. We have a 21 resistance. We have, say, the resistance from the peak back on August 17. There's a VWAP resistance. We have volume resistance between about 39.45 and 39.75, right? So there's all sorts of resistance on the way. What is the resistance? I'm sure some people might have a level that is the resistance, and maybe it's the VWAP for the year, which of course is going to coincide with the point of control. And it's actually very close to the 200 propulsion. So if someone had to say, Rog, I get it. I get what you're trying to say. I appreciate it. But what would you consider sort of the most difficult to get through obstacle to the upside? That combination of the point of control, volume weighted average price, and the 200. Okay. All right. Moving on. Next up is, hey there, Nick. Good morning. What do I think of the idea of trading micro cycle stages that match the direction of the current macro stage? Nick, gang, I don't know if I'm just under caffeinated this morning. I don't have an answer for you, Nick. I have no idea. What do I think of trading micro? So I think anything has to be a matter of what's that mean, right? Anything starts with the definition. I think Aristotle basically says we've got to agree on the definition. I don't know what any of those definitions would mean in terms of the structure. Microcycle stages that match the direction of the current macro cycle stage only in the current no clue, Nick. I don't even know. But however, let's try this. If there's a broader trend, whether that's price, whether that's volume, or whether that's macro. Now, I don't know if you mean macro is in macroeconomic or you're just talking big picture macro lens. But if there's a trend, remember that the pullbacks within the context of a trend, those don't really mean they're counter trend. They're counter, maybe that's the micro you're referring to. Those pullbacks within an overall trend can simply be retracements or regressions to the mean. And they're not necessarily counter trend. They just might be counter momentum or counter, whatever the near term sentiment is. So if that's what you mean, that's my career. My career is finding the big picture trend. It could be macro, it could be price, it could be volume, right? And then finding those corrections within that overall distance. So just because a bus stops at the stop doesn't mean they're turning around, right? They're going to continue on to their destination. So I kind of look at it as little bus stops along the way that I can catch a ride on. So if that's what you mean, I'm in agreement if that's what that means. All right. Am I expecting a range type of day before non-farm? Karthik, I'm not going to try to expect anything. However, to your point, are traders generally going to be maybe sort of waiting for tomorrow's data to make any significant move? I'm with you. This week, gang, I'm going to tell you right off the bat, the downtrend doesn't mean anything. The volume levels, probably the most important levels we can use because they're going to tell us where the greatest group of people are sitting positioned, not long and short, but just where the opinion is waiting. Think volume, think opinion, think attention, right? If non-farm payroll is like initial claims. It's like we talked about, it's worse. It shows that the current action from the Federal Reserve is creating a negative impact on the jobs picture. Equities will go up because that inches us closer to ultimately what's going to turn this market around. It's as simple as this: Fed pivot. If the Fed doesn't pivot, we'll probably continue to see more weight to the downside. Crashing, gang, just because I don't believe a crash is coming, and I don't, doesn't mean I'm a bull. It just doesn't mean I'm calling for the sky to fall, which is actually not really tactical or helpful. So this week is all about, do we or do we not see a jobs picture that says, yes, Federal Reserve, you're not hurting the economy via the jobs picture too badly, or no, Federal Reserve, this is awful. Stop what you're doing. Get us to the Fed pivot. So it has nothing to do with technicals, and it's going to have everything to do with what happens tomorrow at 8:30. So I don't want to sound so ridiculous to say this is the most important non-farm payroll. It kind of is. It's a very important non-farm payroll, because when this is being released, is coinciding with a fairly vulnerable stage of a very new downtrend, and with close proximity to the lows of the year. So this NFP, because of that, is going to be really, really interesting, really, really important. All right, gang. Just like that, our 20 minutes flies on by. Thank you as always for being a part of Charts and Coffee. Caffeinate and dominate, gang. I'll see you tomorrow. Same time, same station. Be good to each other.